thank you all for watching. This is an update on Pepe, and I said that I do lots of video updates today. You guys are running me ragged. This is the fourth one, so go back and watch ICP, go back and watch Cadena, go back and watch Theta if you haven't seen them yet. Hit the notification bell because I've got 2 more videos that I'm going to be dropping. And the reason why I've started off on Pepe with nothing on the chart is because I thought we could have a discussion today. That is a technical analyst's nightmare. However, we can understand exactly what's likely to happen in the more recent swings, prepare for that, prepare for the upside, prepare for the downside, understand your risk to reward. And what we're going to do is we're going to build in some support levels, we're going to build in resistance levels, and we're going to have a clear understanding of what the likely move is going to be next on Pepe, how you can prepare for that, how you can take advantage of the next move. So firstly, what I'm going to do is we're going to bring up some tools. I'm going to use the fixed range volume indicator. And what I want to do is from this breakout here, I want to take it and I want to take it all the way to the swing high, including where current price action is now. And what that's going to do is give us the biggest range of traded volume within the whole of this range. So you can see here, this is clearly the biggest area of traded volume. Look how that acts as support. Look how it acts as resistance when we're below that. Once we broke through that, flipped as support, we haven't come back and retested that. We're going to add in this area because that's going to be our first area to come back on. And that is from where price action is now. It doesn't look much, but it is a significant drop, and that is a drop to 33% to the downside. If we did get a big drop of 33% to the downside, expect that to be a big support zone. So we're going to take off this now, and we're going to add in our moving averages. So we could stick our moving averages on there. And one thing that happened here is we got a golden cross. Now, this is a horrible golden cross. This is a messy golden cross. What is a good golden cross and what is a bad golden cross? Let me show you. So if price is trending to the upside and the moving averages are moving to the upside like this, you've got your 200 and then you get the 50 that crosses up and they're in a directional bias where they're moving up, that is a good golden cross. When you've got the 200 that crosses underneath here, the 50 that crosses over, when they're both going in a downward direction, that is a bad golden cross. So we needed a reversal to happen and we need them to start sloping up, and they're starting to do that now. So let me just get rid of these on the chart. I want to show you another thing as well, guys. You know me, support and resistance. We're going to build in support, we're going to build in resistance, and that price action's king as far as I'm concerned, and indicators are secondary to price action. Why is that? Because price action's real time. Current candlesticks tell you a story and help you identify what's happening now, not what's happened previously collectively over 100 candles, 50 candles, or whatever the metric is that the indicator measures. Let me give you an example of that, actually. This is Lux Algo. I've brought this and I've put this up. Everybody raves about this Lux Algo. And I'm not slagging Lux Algo off. Let me just show you something. Right, we've got a support base here. We've got a support base here. Lux Algo's telling us a support base. Clues look left, price action. That was resistance, resistance. That come back, that flipped as support. We knew that was the support base without Lux Algo. Where's the next support base? Is here. You've got your 200 moving average. You've got this build up of price action. That build up of price action, when you break above, that's an RS flip. You expect that to flip as support. Why do you need the Lux Algo for that? We know that's support. This price action tells us. What about this resistance barrier up here? Lux Algo tells us the resistance here, that there was a resistance barrier here, price action, build up a price action. We don't need this. We can understand by looking at the candlesticks. Where's the next one? Up here. What happened? Price action, price action, price action. Let's get rid of this. Don't need that. Just makes the charts messy. Get rid of that. That's why price action's king. Now, what we're going to do is we're going to stick in our Fibonacci level. So what we're going to do is we're going to stick from the swing high here all the way back down to the swing low. And we're going to look for retracement levels, which are going to be our resistance barriers. So you've got your resistance from here, swing high to the swing low. And I'm going to get rid of this 236. We talked about the 236 in the Theta video before. It's not as relevant on this. You can see price action does stick on there, but I'm not bothered about the 236 in this instance. So we can identify and we can understand where the next resistance barrier is, 38.2% retracement. We don't need any other indicator to tell us that. We've got our Fibonacci. We understand that's resistance once, twice, 3 times. That's acted as resistance. It's being met by resistance. And now we need to break through that level. So that's the key level, 0.001406 that we need to take out in the short term. Stick that on there. Right. How do we understand and how do we identify and how do we know when the bulls or when the bears have got momentum? We've looked at price action, we've added in our support, we've added in our resistance. Now we can bring in the indicators as a secondary measure to tell us, are we overbought? Are we oversold? Where are we? We've bounced off the 200 daily moving average. The 200 daily moving average always carries a lot of weight. Each time that price hits it, you get a reaction from there, support or resistance, till you break through and you reclaim that area. So you can see we've got a big support bounce. What happened there? That was the Jackson Hole event. What happened between these few candles here? They told a story. 1, 2, 3, 4, 5, 6 candles. It took the bears 6 candles, 6 days to push price action down. We hit the 200 moving average. We got a positive speech from Jerome Powell. And then one candle took out all of those days. So that's strong. Now, we can even do something within these few candles here using our Fibonacci tool. This is really delving into it now. So what levels are we looking for? You've got your 61.8 down here. So if we come back down to 0.0001053 at this 61.8, you would expect this to be a support in the recent term from this swing, and that would expect a continuation to the upside. So we're pulling back now. That's not negative until we start breaking and break into the downside. If we test the 786, you start getting worried. If you come further down, you get even more worried. You've got your 200 to fall back on. That's positive. So what I'm saying is there's strong support there. You've got this resistance barrier. That's an RS flip. That comes back down to the 618 as well. So you've got lots of support at this level. Now, ultimately, the aim of the game, like I say, is to break this barrier here. Let's get rid of the 0.5. That's not even a Fibonacci number. Get rid of that. So once we've broken this barrier, we've got the 61.8% retracement, and that's going to be a move of 38% to the upside. So from where price action is now, that's 81% to the upside. How do you play this move? Right, this is where you stick in your trend line. This is how you understand who's got momentum at any given time. So you stick in your trend line. We've got our indicator up. Get rid of that. Got our indicator up. We're coming from an oversold position and we're waiting for a break. Once we've got a break, as long as we've got enough momentum on here, we can push through. We can take out that lower high, which is going to be an important one. That's 0 point loads of zeros, 1, 2, 3, 6. Once we take out that high, reclaim that as support, and the stochastic does something like this. Push up, push up, push up. Take out that high, and then reclaim that as support as the stochastic starts coming back down. And then we've got enough momentum to push up and try and take that 382. So that's what I'm expecting in the next few days. And that's how I would play the next move, guys. And that's how you need to understand and identify that price action is king, and learning how to read candlesticks is the most important thing. Fibonacci numbers, support, resistance, they are the main things that you need to understand when you're trading. Don't worry about fancy indicators that say buy here, sell here. Don't pay for any indicators, for God's sake, because we've just shown you what an indicator does and how the price action tells us exactly what that indicator does without that indicator being there. Right, if you do like this video, what have I got next? We've got Fetch next. So subscribe to the channel, hit the notification bell, join the Discord group. It is completely free. Follow me on X. It's Bullseye number 4 crypto, Bullseye for crypto. And I'm going to start doing individual videos on X as well. So I'm not packing up the YouTube channel too much. So make sure you follow my socials, and I'll see you guys very shortly for Fetch.